Hello, guys. Good evening, everybody. Welcome. All right. Okay, let's give them more time to join. All right. Okay. Um, start in the next 2 minutes. Let's give some people more time to join. All right. All right. All right. Okay. All right. People are coming in. Just start in 1 minute. First of all, can you guys see me?
Yes, I can see you.
Okay. Okay. Thank you. Good evening. Good evening, everybody. Yeah. Welcome. My name is Marvelous. My name is Marvelous Macaulay. Some people know me. Uh, some people may not know me. is seeing me or hearing about me for the first time. Okay. I'm going to be sharing my screen. So
We just get them.
all right. Can you see my screen?
Yes.
Oh yeah. I'm having poor network. Poor network. Uh, I don't know why the network is misbehaving today. Please, can we see my screen now? I don't know what's.
Okay.
I can't hear anything from you guys.
Eh, we can only see your face. We can't see your screen.
Okay. All right. Let me confirm it again. How about now?
It's loading. Yes, now I can see it.
Okay. Okay. All right. Okay. All right. So today we are going to be talking about the basics of crypto trading. And first of all, I'd like to, um, like I said, my name is Marvelous Macaulay. But I'd like us to start with a word of prayer, just a minute of prayer. Father, in the name of Jesus, we thank you for this meeting today. But I ask, oh God, that you're going to open our understanding to see, open the eyes of our understanding to see and understand everything that is going to be taught today. And I ask that whatever I say will be out of your direction. Thank you, Father, in the name of Jesus. Amen. All right, let's go. Let's
Amen.
kickstart.
All
So,
right.
okay. All right. I just put the screen in full screen. All right. Thank you for coming. So this is basics. This is the basics of crypto trading, and my name is Marvelous. I'm a crypto tutor. I'm based in Port Harcourt, Nigeria. My background is in marketing. I study marketing management, and I have experience in teaching also. But most of all, I'm passionate about cryptocurrency education and driving adoption of blockchain and cryptocurrency assets in Africa. At the end of this event, we should all know what Bitcoin and cryptocurrencies are. I believe most of us here already know what they are, and there are several use cases, although not for this class per se, but probably for the next class. But this particular one would know, I'm going to be showing us how to trade Bitcoin, crypto, and other cryptocurrencies here on Binance. First of all, I'd like to let us know that Binance is the world's leading blockchain and cryptocurrency infrastructure provider with a financial product suite that includes the largest digital asset exchange by volume. Binance is the number one exchange by volume. That is, there is no other exchange on earth that does the amount of volume that Binance does. So Binance is the number one, not just in volume and every other thing in customer support, every other thing. So uh, Binance is also the sponsor of this program. So everything you're learning today is because of Binance. I'm just a channel. All right. So trusted by millions worldwide, the Binance platform is dedicated to increasing the freedom of money for the users and features an unmatched portfolio of crypto products and offerings. So I believe you'll understand why I got the title of my course today, the freedom of money. So I'm here to show us how to access the freedom of money. All right. But first, the disclaimer is this. My disclaimer is this. I'm not a financial advisor. I'm just an educator, and I'm not here to give a guaranteed way to print money or to mint money, or I'm not here to tell you that once you use this, once you do this, you become a millionaire overnight. No, this is just for entertainment purpose. This is just for entertainment purpose as well as educational purpose. All right. So, all right, let's go. Let's kick things off. Give me a second, please. Let me make sure. Okay. So let's kick things off with the definition of the topic we'll be discussing, which is trading. So trading basically, let's leave the English now on the screen. Trading basically is the buying and selling of commodities. The commodities may be rice, maybe beans, they may be cars or whatever it is you call them. So basically, trading is you buying something and someone else selling it, or probably you're buying from someone, or you're selling to someone, or someone else is selling to you, or buying from you. So that's what trading is. But if we are going with the definition here, we say, okay, a staple of economics, trading simply refers to buying and selling of assets. When you buy your groceries at the local store, that's a trade. When you exchange your old PC for a new game console, that's a trade. We could go on forever here, but to cut the long story short, any activity where you give something to someone in return for something else is a trade. Please mute yourself. Please mute yourself. Thank you. Thank you. So, whatever activity where you exchange something for something else is a trade. You get. So this principle really extends to the financial markets, which is the stock market, the forex, foreign exchange markets, and every other thing that has to do with finance, the forex pairs, the options, cryptocurrencies, stocks, and all that. So, but don't bother yourself if you don't understand them now. Those ones are quite far fetched. What we're here for is cryptocurrencies. So we are going to be understanding what cryptocurrencies, how to trade cryptocurrencies on Binance. So first of all, um, we're going to understand how the Binance interface works. So I'm going to be taking us through the Binance interface. Excuse me. Sure. Okay, where is my Binance? All right, this is it. Okay. Okay, so getting started with the Binance interface, we're going to be understanding market pairs, we're going to be understanding the charts and the order box. These are the three major parts we're going to be understanding on the Binance interface. But before we go on, I'd like to let you know that this Binance interface is I've used many exchanges. You understand? I've used many exchanges, and I can say with all certainty, I can say with all pride that the interface for Binance Exchange is the easiest, it's the simplest. I mean, all you have to do is just get someone explain certain things to you just one or two times, and you're good to go. You understand how to use the Binance interface for yourself very well. There are other exchanges where you go to and then you get very confused, but this one is self-explanatory. That it's once you just interact with the interface two, three, four times. In fact, you don't need to get to two, three, four times. You understand it. So let's go on. Let's move to um, okay. This is Binance, and right. Okay. So this is my. Please hold on. Let it load. Okay. All right. I really need this too. Okay. I need to move this thing to. I don't know why it's okay. Let's go with the classic. Let's go with the classic because I think okay. No, let's go with the advanced. I feel that's easier to navigate through because everything you can see everything at once. So this is the advanced interface. Forget about the name advanced. It is one of the easiest to navigate through. Why am I having network issues? Can you guys still see? I don't know. I feel I'm having network issues. Can we still see this? Somebody please chat me. Please say something. I want to make sure. Can we see? Can we hear me? Can we still see this? I don't know where I'm getting this. Okay. Oh, all right. Thank you. I wasn't hearing anything, so I felt I was out. All right. So first of all, I'm going to be explaining the chat. This is the interface. Let me turn this off. All these are indicators. But first of all, this is the interface. And once you open your Binance, um, the Binance side, this is the first thing you see after you go to the trade aspect of it. So this right here is the chart. This right here is the price chart where you see the price movements and the price data and all. So, but this place here is where you buy, you buy and sell. You place your buy orders and your sell orders. You get. So this other place right here is the order book. I'll be explaining all these things one by one. This place right here is the order book where you can see um, the orders that people have placed. These things are not computer actions. These things are actually human beings like me and you actually placing orders to buy or to sell. You get it? So if let's start with the order book. If you look at this order book now, you have the green and the red aspect of it. For this red aspect, it shows the people who are uh, placing sell orders. It means here that okay, let's take this price for example at 13,000 549. There are people, okay, that's moved. It keeps moving, so it's not static. But then just get the point. At this particular price here I'm pointing, someone has placed an order to sell this amount of BTC, right? People have placed order to someone has placed order to sell this amount of BTC. You get at this price. The same thing with this one too, to sell this amount of BTC at this price. So down here also the green area, you also see that people have placed orders to buy this amount of BTC right here at this price, 13,555. You get. So a trade takes place when these two orders meet. What do I mean? If someone places a trade in the order book to buy let's say one Bitcoin at 13,500, that trade will only move, will only activate, or that order will only activate when someone who is willing to sell at that particular price shows up. When someone who's willing to sell places an order at that particular price, someone placed a buy order at 13.5, then someone placed a buy order at what do they call it, 13.5 as well. So that is when a trade happens, when when they meet together at a particular point at a particular price. So that is for this order book. What you need to do, what you use the order book to do is just to see the price data per se, not necessarily data, just to see the prices at which people are placing their orders and the amount. But you can't actually, most times it's difficult to capture it because it keeps moving, so it's just there for a sneak peek. Let me use that word, a sneak peek. Then this place is actually where you come to study price data. The chart here, you come here to study price data to see, like this is Bitcoin USDT. So you come here to see the movements of Bitcoin, what has been happening, or the history of that market or that market pair per se, Bitcoin. I will also show us what market pair and market are. So this is where you come to see the history, to see the history of the price action of Bitcoin. So these ones are indicators for now. We don't need those. We don't need these ones for now. Let me just remove them. Just remove them. So we can only be seeing, yeah, we can only be seeing the price data. So I've explained to us the chart and the order book. The next thing is the order box. The order box right here is where you buy, where you place your buy and sell orders. This, all these orders you're seeing here are placed and this order box. This is order book. This is order box where you place your buy and sell order. Assuming I wanted to buy Bitcoin at 13.5, right? I come here, put the price I want to buy it, and then put the amount of Bitcoin I want to buy, you know, and then buy my Bitcoin. Or I have Bitcoin and I want to sell. I come here, put the price at which I want to sell, put the amount of BTC I want to sell, and then sell my BTC. But don't worry yourself, we're going to be doing a live, a practical session where I'll show you all these things. We'll show you how to do this on your own without needing any help. You get, so don't worry about that. Don't panic. Let's go back to our slide. Okay, so I've shown us the order book, I've shown us the order box, I've shown us the chart. Okay, I didn't show us the market pairs. So market pairs are first of all, markets are, like we all know, a place or a meeting point for buying and selling. So, but when it comes to cryptocurrency or financial markets, you see two different commodities, right? You see two different commodities. You're buying one or selling the other. This is what I mean. Assuming you go to the market now, you go with money, right? You go with money. Maybe you want to buy rice. So the market is, let's say, Balogun market in Lagos. I don't know. I don't really know what are the sell rice there, but I'm just using that as an example. The market is Balogun market in Lagos, right? And then you're going with cash, which is money, naira, but you want to buy rice actually. So the market pair in this case would be rice and naira. You understand? So you're buying rice with naira. The same thing happens here with BTC USDT. This thing here is a market pair. There are other market pairs here. You see this Aave USDT. You see this is ADA Cardano. The name is Cardano, but the short form is ADA. ADA USDT. See AION USDT. All these things are market pairs. All these things are market pairs. You get, so you buy the left, the commodity or the crypto, the coin on the left with that on the right. It's as simple as that. Don't get it too complicated. You buy the one on the left with the one on the right. So you buy Bitcoin with USDT. In this case, you buy Bitcoin here with USDT. But let's assume you have Bitcoin and you don't want to hold it again. You want to sell. The same thing happens. You're selling this your Bitcoin to get USDT. So if I'm going back to our rise naira case, it means that you're buying rice with naira and naira, you're selling rice rather to get naira. You get, so I have naira, I want rice. So the pair will be rice naira. I have rice, I want naira. The pair will still be rice naira. But then for someone who has naira, you're going to be buying rice. For someone who has rice, you're going to be selling your rice to get naira. So in this case, the BTC USDT now, you're going to be getting BTC for your USDT. Or if you have BTC, you're going to be selling your BTC for USDT. So that's how it works. That's what market pairs are. Markets are just, the market is just the different, like Bitcoin now has a market. Bitcoin has a market where you have Bitcoin USDT, you have Bitcoin Naira, you have Bitcoin ZAR, you have Bitcoin AUD, you have Bitcoin BUSD. That's Bitcoin markets, places where the place where you go to buy Bitcoin, or the different pairs that can help you buy Bitcoin. So that's what it is. Then the next one now is, let's go to, so now you understand the market pairs, you understand the order box, you understand the chart, and you also understand the order book as well. Okay, let's go to the next one. Okay. So market pairs and okay, I think I've explained it, but I'm going to still go again for anyone uh, who hasn't understood it. So what is a market and what is a market pair? When we talk about a specific market, we mean the place where buyers and sellers come together to trade a certain asset. Like I said, when we talk about a market pair, we are talking about if we buy something, what are we paying with, and if we sell something, what are we getting? I've explained it. Now, in this explanation, they said, let's take the market pair BTC ZAR, for example, the same for BTC NGN, BTC KS, BTC USDT, and all that. So the BTC ZAR pair is the market for buying and selling Bitcoin in rands, that's the South African currency. And market pair BTC ZAR indicates that if I want Bitcoin, I have to pay with rands. And if I want to sell my Bitcoin, I will be paid in rands. The same thing happens with Bitcoin engine. If I want Bitcoin, I pay with Naira. If I want to sell my Bitcoin, I'll be getting Naira. The same thing with Ethereum NGN, which is this ETH NGN, the market pair, the ETH NGN market pair. Is a market where users buy Ethereum using their Naira and sell Ethereum to get paid or to receive Naira. It's as simple as that. There's no difficulty there. All right. So orderly, yes, I love this one. I love this one so much because it's uh, I had some people complain about it a lot. So let's go to other types. There are three um, basic other types that we have. You see, let me close this. All right. So a limit order is an order to buy or sell an asset at a specific price or a better price. The price is called the limit price. Limit buy orders will execute at the limit price or lower, while limit sell orders will execute at the limit price or higher. When you're setting a limit order, you're basically saying, I'd like to execute this order at this specific price or better, but never worse. Let's go back to let's go back to the chat, the exchange, so that we could see for ourselves. Let's go back to the exchange. All right. So this is the price of this one right now is 13k 574. So I want to buy Bitcoin, but I feel no, I feel the price is going to come. Maybe I've done my analysis and I've decided with my analysis, I feel Bitcoin will come down to 13,000. Right? Bitcoin is at 13.5 now, but it will come down to 30,000. So I come here and say, okay, I'm going to be buying, I want to place a limit order for Bitcoin at 13,000 naira. How many Bitcoin do I, $13,000 rather? How many Bitcoin do I want to buy? The amount of Bitcoin I want to buy is what I'll put in. Maybe I want to buy one whole Bitcoin. I have so much money, I want to buy one Bitcoin. Very good. I put the amount here and then I place my order, buy BTC. Once I click buy BTC, now it doesn't execute immediately. Why? Because it has not gotten to that price. This order will only execute when Bitcoin gets to 13,000. If Bitcoin never gets to 13,000 again, this price will never execute. So this price is only going to execute if and when Bitcoin gets to 13,000. So that is what limits order. The same thing for selling too. Probably still have one bit, maybe I have one Bitcoin and I want to sell it. But then this price, I feel this price is too low for me. I feel Bitcoin will get to 14,000. So I come here and put 14K instead of selling at 13.5. I feel it's going to get to 14,000. So I put the amount of Bitcoin I want to buy, and then I want to sell rather, and then I sell, and that's it. It's that simple. This limits order. Then the next one is the market order, and we say the market order is an order to buy or sell at the best price currently available, or the best currently available market price. So it's basically the fastest way to get in or out of a market when you're setting a market. Okay, when you're setting a market order, you're basically saying, I'd like to execute this order right now at the best price I can get. So just do it for me. How much you go take, just do it for me. Let me go. That's what you're saying there. So let's go back to the exchange. So imagine I'm in a hurry or maybe I'm in a hurry. I've seen the market is moving. I want to buy. I want to make sure I follow the market. I catch the market. I will not use a limit order. I'll just come to market and place a market order, uh, telling the market that I forget about the price. Just buy it for me. I know the price is around 13.5 now, but whatever price is available, whatever good price is available at the time, just buy. Just buy for me right now. Just buy it. So maybe I have up to 13.5. I want to get up to 1 Bitcoin. I put the amount here, 1 BTC, and buy 1 BTC. Buy it for me at any price, any available price. So at that time, if the price of Bitcoin right now is at 13.563, so and then I come here. This is the order book. This is my order book. I need my order book back to where it was, please. Excuse me. I, sorry for that. Excuse me. I'm trying to make sure this. Why am I not getting my order book up? Anyways, so this is the order book, right? So at that time, I click the market buy or market sell. At the point I click the market buy or market sell, it picks the best available price at that time. Usually, if you're very observant, you notice that if you're buying at a market price, it usually picks uh, the first value here. That is the first price, the first available price at that time. And if you're selling, it usually picks the first available price at that time. You understand? So if you're using market, it just picks the best price that is available to you at that particular time, and then it executes the order in a split second. Once you click market buy or market sell, it moves. It doesn't waste any time. It just moves and picks the order, and we move on. So that's that for market buying and market selling. Let's go on. The stop loss order. Let me increase this. So for the stop loss order, now that we know what market and limit orders are, let's talk about stop loss orders. A stop loss order is a type of limit or market order that's only activated when a certain price is reached. This price is called the stop price. I'll explain that. The purpose of a stop loss order is mainly to limit losses. Every trade needs to have an invalidation point, which is the price level that you should define in advance. That is the stop price. This is the level where you say that your initial idea was wrong, meaning that you should exit the market to prevent further losses. So the invalidation point is where you will typically put your stop loss order. Forget this big grammar. Let's come here. So if you come to this place now, you see this is stop limit. I've gone to stop limit. So what happens is, assuming I bought Bitcoin at this is 30. Okay, let's continue with this price. I bought Bitcoin at 13.5, right? And then I noticed the market is going down. Market is going down. Okay, let's go this way. I bought Bitcoin at 13.5, but then for safety reasons, in fact, every trader should be should be conscious of risk management. Every trader should be conscious of risk management. Every trader should be conscious of losses, because as a trader, it's inevitable. There are times when you're going to make losses. You understand? So while you're placing every trade, you make sure that you use a stop loss. Last night I put on my status that anybody who is trading should always use their stop loss, because it's your safety net. Because nobody is certain about the market. No matter what kind of technical analysis or what kind of news you hear, or what kind of whatever it is that happens in the market, you have to still use safety net, because the market can do you crazy. You get the market can do you crazy. So it's advisable that you use your stop loss. So how do you do that? I bought Bitcoin at 35, but I want to make sure that if the market goes below 13.4, I'm not running into a loss. So what do I do? So what do? I come here, put a stop at 13.4, right? I put the stop at 13.4. The stop now simply means a trigger. Stop means this stop now is a trigger, like the bell that will ring and say it's time. The alert that the computer will receive once the market gets to 13.4, then sell my Bitcoin for me at 13.490. Why do I use 13.490? That's a okay. Let me just explain it. I use 13.490 because there are instances where the market might move with so much speed that it might not pick your order. This is quite advanced. There are instances where the market moves so fast. Maybe a whale somewhere places a sell order, a heavy sell order, and then the market moves so fast, it keeps your order because it's not just your order that is on the market. As you can see, there are many orders on the order book. So it keeps your order at 13.4. You get, so it's sorry, 13, this is supposed to be 13.390 rather, not 13.490. So it keeps your order. The best thing to do is keep it a little bit below your order to make sure that the market picks up your order at the time uh, when the market starts moving or moving below. Jesus. Are you serious? So I've been talking to myself here since. Then is it showing now? Ha! Oh man. I didn't even know. I'm sorry guys. Are you serious? Oh boy. Ah. Jeez, for 15 minutes. Wow. Wow, 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 wow. Dang. I think it's network. I'm really sorry. I think it's network. Ay, ay, ay. Ay, 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 ay. But you guys can see it now. Ha, ha, ha. This is bad. Jeez. I'm sorry. I'm really sorry, guys. I don't know. I don't know what happened. I don't know what happened. I'm really sorry. I'm really, really, really sorry. I'm really, really, really sorry. Wow, wow, wow. All right. Let's continue. So where did someone should please unmute himself? Okay, let me see the chat. Where did you guys stop seeing my screen? Please, I want to go back to that place. Where did you guys stop seeing my screen? Probably was network. I don't know. Can someone just tell me where limit order? Okay, okay, okay. I'm sorry. I'm sorry. Wow, 15. Dang. All right, let's continue, please. Let's continue. So limit order. Let's go back to. This is so funny. So like I said, imagine I'd like to place. Wow, this one shocked me. Regardless, we move. So I want to buy Bitcoin. So I want to buy Bitcoin now at Bitcoin is at 13.5 right now, and uh, well, this is the funny me. All right, so I place an order. If you place an order for Bitcoin at 13.5, right? Place an order for Bitcoin at 13.5. I feel Bitcoin is still going to go back to 13,500. So I want to buy one Bitcoin at 13.5. So I put the amount of Bitcoin I want to buy. You get, so it shows here that the total amount of Bitcoin I want to buy is 13.5. is one Bitcoin rather at the price of 13.5. So I place my buy order. Now, once I place my buy order, the order doesn't click until Bitcoin, one way or the other, gets to 13.5. If it never gets to 13.5, if it never gets to 13.5, I wanted to make sure my screen was still showing. Someone was calling me, sorry. So if it never gets to 10.5, 13.5, yes, I'll make the recording available. I, I think I'm not sure yet. I may. So, but if it never gets to 13.5, the order doesn't execute. So it has to get to 13.5 before it executes. That's for limit order. The same thing for selling, either for selling or for buying. You get so it's if it doesn't get to 13.5, it doesn't execute. If I want to sell, maybe I bought at 13.5 and I want to sell at 14K. Maybe I want to sell my Bitcoin at 14. Let me input 14,000 here. Maybe I feel it's going to get to 14,000 from my analysis. I want to sell my one Bitcoin for 14,000. I go here, I go to the sell markets and input 14,000, input the amount of Bitcoin I want to sell, and that's the limit order. That's for the limit order. Then for the market order, it's quite easy too. But the market order is it helps you sell or buy a particular commodity at the best available price at that particular time. If the best price is 13.5, it buys for you or sells for you. If the best price is 14K, it buys or sells for you. All you have to do is input the amount of Bitcoin you want to buy or sell. That's it. That is as simple as that. So you put the amount of Bitcoin you want to buy or sell, and then click sell. It sells or it buys, whichever one you want to do. You don't put the price because the market chooses the price for you. The market chooses the best available price at that time. At that time. So if the best price is 13.5, it takes that price. If the best price is 14K, 14.5, whatever it is, it takes that particular price. Let's move on. We're already um, running out of time. So okay, the next one I was talking about was stop limit. So stop limit is just you putting a safety net. It's just for risk management because nobody is 100% correct. So you might do all your analysis, technical analysis, and all that, but then the market will still do what it wants to do. You understand? So we always like using. You should. Every trader should use stop loss. So assuming I bought Bitcoin at 13.5 and I feel okay, um, if the market goes opposite, maybe I bought Bitcoin hoping it's going to go up, but I feel okay, the market might still go opposite, which it may. Then I put a stop loss. Probably I want to put a stop loss at 13,000, right? So I put the stop loss at 13,000 naira. I have, excuse me, I have one Bitcoin which I want to sell. Stop losses are mostly used for selling. They are mostly in the sell aspect of the order book. So I put my stop loss at 13,000. Once it gets to 13,000 naira, I told the computer to sell for me at 12,990, right? But there's a reason I put at 12,990. I'm going to explain. So this stop here simply means a trigger or an alert or an alarm that rings to the computer that it's time to sell this commodity, it's time to sell this coin, it's time to sell this Bitcoin. So I put a trigger. This stop here is simply a trigger. You get so once the price gets to 3,000, once the price falls from the current price to 3,000, it sells for me at 12,990. That's it. So the reason I put this is because there are times where the market might move with so much speed that you might not pick your order if it's exactly, if I put this order at 13,000, if I put the trigger rather at $13,000 and put the limit also at $13,000, the market might move past it and it won't pick because the trigger has to click first before the limit order picks. You get so I put the limit here so that it sells for me at a lower price because normally if you study the order book, you see that if you're buying a particular coin and you're buying at a slightly higher price, it feels faster. Let's take our normal market scenario. You go to the market, you want to buy something and the seller says it's 100 naira. If you tell the seller, okay, I'm going to pay you 110, maybe you're two or three people that are bargaining for that particular product, and you tell the seller that I'm going to pay you instead of 100 naira, I'm going to pay 110 naira, automatically the seller will want to sell it to you. That's how it is even here. So if you're buying and you put a slightly higher price, it, there's a very, very high probability of you buying faster. If you're selling also and you put a lower price, if you go to the market to buy rice, and this woman right here is selling at 3,000, this woman says, my customer come, I'll sell for you at 2.5. Who will you buy from? As long as it's the same quality of product, you buy from the person who is selling cheaper. The same thing with here. So once the price gets to 13,000, the computer would sell for you at a cheaper price. It will make sure your order is filled at a cheaper price. So that is why I use, most of us, in fact, let me not say every trader, I don't know. Most traders use a lower price, for the limit order. Once you put the trigger at a slightly higher price, we use a slightly lower price to make sure our order is filled. Right? So that's that for that. Let's move on. So we've discussed the limit order, we've discussed the market order, and we've also discussed the stop loss order. Let's move to, this is the juicy part. Trading 101, technical versus fundamental analysis. First of all, I'd like to um, say that this particular class is focused mainly on technical analysis, not fundamental. But we are going to still give the definition of fundamental analysis, right? So fundamental analysis is, according to the definition we have here, looking at the underlying factors that can affect an asset value, the news. First of all, maybe let's say for Bitcoin, now you hear that so big company. Okay, recently PayPal incorporated BTC into their system, and that is one of the factors that also helped push Bitcoin upward recently. So for all these are also fundamental analysis that affect the price of commodities. So for Bitcoin, this includes number of addresses, hash rate, trading volumes. All these um, are part of the fundamental analysis, but we're not here for that. Let's move to technical analysis. For technical analysis, I actually love technical analysis. It's using price history, price data, price patterns, or the trends that emerge to make predictions about the market. So when you look at the accumulation of price data, the price history, what price have been doing in the past number of days, months, weeks, or whatever, use it to predict, to actually um, create, anticipate a pattern or anticipate a price in the future. So these are the charts we always see with multiple lines by the end. By the end of this lesson, you'll be a TA wizard. I hope so. I hope we listen and uh, all right. So let's move on as technical analysis. So using TA, the main tools we are going to be looking at today is candlestick charts, trend lines, and support and resistance. Then common TA indicators and how to use them. We'll see the RSI. I promise you, if I forget, please remind me. I'm going to show you guys another way to use the RSI. There's a standard way that most people know, most teachers teach, but then there's another way to use the RSI. I'm going to show you that. So I'm going to be looking at the RSI, the moving averages, and the Bollinger Band. Those are the three things I'm going to be focusing on today, right? Um, so let's go to the next one. So first of all, let's understand what candlesticks charts are. So a candlestick is made up of four data points: the open high, the low, and the close, which is also referred to as the OHLC values. The open and the close are the first and last recorded price for the given time frame, while the low and high are the lowest and highest recorded price, respectively. Now, candlestick charts are one of the most important tools for analyzing financial data. It's both used in stocks, it's used in stocks, it's used in cryptocurrency, it's used in forex, it's used in so many other financial analysis. So candlesticks dates back to the 17th century Japan, but have been refined in the early 20th century by trading pioneers such as Charles Doe. Most people in the trading community will definitely know who Charles Doe is. So candlestick chart analysis is one of the most common ways to look at the Bitcoin market using technical analysis. And we're going to be looking at it right now. So let's go back to our chart. Let's go back to our chart and make sure, excuse me, to avoid the enemy. All right. So this is what we're looking at right now. So these things you see here now are candlesticks. What is happening to my network? Okay. So each candlestick right here shows price data of a particular period. Now I say particular period because you can actually adjust the period to whatever it is you want. You can say, like if you come here, I can adjust this period to 1 month. So this candle, each candle you see here represents 1 month of data. Let's pick out a candle. Let's pick this long candle right here, this particular candle here, right? Looking at this particular candle, you say, what happened in this candle? It simply shows from the explanation we gave, a candle shows you the opening point, the closing point, the highest point, and the lowest point. I hope you got that. Candlesticks show you the opening point, the closing point, the highest point, and the lowest point. So, judging by that, if you look at this candle, you're going to be seeing the opening point and the closing point. How do we see? How do we know which one is the opening and which one is the closing point? Now, for this color set, the red and green, the red candle signifies candles that close lower, and the green candles signifies candles that close higher. It simply means in the green candles, price went up. In the red candles, price went down. Let's use this green candle for analysis now. It means price opened at this point here, and closed at this point here, because we can see that the price went up from our description. So price opened at this point here and closed at this point here. It's as simple as that. But in as much as price opened here and closed here, at some point in that month, price got to this high here, this point here, this 19.8. At some point in this month of December 2017, price got to 19.8. And also at some point in that December, price got to, this price is 9.4, right? So price opened at, what price is this? I think at 10,000 or so, 9,800, I believe, 9.8, and closed at 13.7. But at some point in that 1 month, price got to this high and price got to this low. The same thing works for other time frames, other time periods. So this is the weekly. The same thing happens here. At this, for this candle, this red candle here, it means price opened high and closed low. So at some point, price also got to a high of, let me increase it to show you. At some point, price got to this high here, this particular high here, this tip here. It's called a shadow. It's called the candlestick shadow. So at some point, price got to this particular point, and at some point, it fell to this particular point. But then it closed at this one here. For this week, for this 1 week, it closed here, and it opened here. You get. So that's what the candlesticks signify: the open high and the low. The open high, the low, and the close. But the thing is, the one good thing is you don't have to always try to increase this candle to see what happened. You can just put your cursor on it. Once you put your cursor on it, you put your cursor on it, you see, like now, look at this one. If I put my cursor here, I see the open. Look at the top here. At this point, when I put the cursor, you look here. I see the open. The O stands for open. The H stands for the high. It got to the L stands for the low, and the C stands for the close. It means that for this candle, the price opened at $8,953 and got to a high of $11,392, but it also got to a low of 8,950, and finally it closed at $10,906. So that's what it means. The same thing for the daily time frame, the same thing for the hourly and the minutes and all that. So this is the daily. We are about the daily time frame. So that's basically what candlesticks shows. So let's go back to. Okay, let me see the time. All right, let's go back to EOS. Okay, so this is we discussed candlesticks. Let's go to trend lines now. So trend lines are widely used by both traders and technical analysis. They are lines that connect certain data points on a chart. Typically, this data is the price, but not in all cases. Some traders may also draw, like me, I draw trend lines on indicators too, like RSI. I draw trend lines on RSI. But the main idea behind drawing trend lines is to visualize certain aspects of the price action. This way, traders can identify the overall trend and market structure. You get. So let's still go back. We always want to use our charts for practicals to see. So we're going to draw our own trend lines here, and you know, see what comes of it. So for trend lines, we would have to be connecting. We would have to be connecting. Uh, Setting points. Okay, let's do that now. This is a low here. So I draw a trend line like this showing it has to be connecting to at least, this is a perfect trend line because it shows that price touched at least 2 points. But if this is not a valid trend line because it's crossing the price, it's not, the price has to just touch it and move on like this. You get. So with this trend line, I can say the next time Bitcoin falls, right, this trend line will act as a support for it. It means when if trend line falls, I'm expecting if the price falls rather, I'm expecting the price to touch this trend line. So whenever I see price fall to this point, it probably touches this trend line, it's a good sign for me to say, okay, I want to buy at this point. It's a good sign. It's reasonable to buy at this point because, like you can see, the price touched it here and touched it here and touched it here. So I can predict that, okay, if it touches it the next time, it's still going to continue. But in a case where the price breaks through, right, or the price let me show you an example. Imagine now, before now, I drew this one, the first one I showed you is an uptrend. First one I showed you is an uptrend. So imagine this is a downtrend. The price was falling. The basic what they call it, the basic explanation or understanding for trend lines is just the fact that, in fact, you can actually predict a trend. You can predict a trend by just looking at it, even without drawing trend lines. I can predict the trend. How do I know? Once a price starts making higher highs and higher lows, right? Once a price starts making higher highs and higher lows, I can confidently say that market is trending up. What are higher highs? This is a high here. This is another high. This is a high. This one is a high. This one is a high. Right? It's making higher high. This one is a high. So I can say in the bigger picture, the market is in an uptrend. But if it's making lower lows, like this one here that we're seeing here, we can say if we're using a lower time frame, we see that this particular data here will be bigger. You can say it's on a downtrend. That is, it's making lower lows and lower highs. This is a low here. This is a low. This is a low. This is a low. So the highs too are making lower turns instead of higher turns like on the uptrend. So, but in a case where this is I've drawn my trend line, and it's working for me. The price have been going down, it's not breaking through. Immediately, I see the price break through, like at this point, it touches it, goes down, retests it, and then breaks through. Yeah, the price makes a breakout. Just be rest assured that the price is going to go higher. Once price breaks through this trend line, as you can even see here, if I expand it, you see that price actually tests it here, tests it the second time, then finally breaks through a little bit here, and then when the price began again, it broke through and tested this instead of a resistance. Now I'll show what resistance and support are. Instead of a resistance, now it now acted as a support, and the price went higher. So whenever you draw a trend line like this, and the price breaks through, or you see a breakout, expect price to move in the opposite direction. That is opposite direction of the trend, because from this trend you can see it's going down, but once it breaks out, the price is supposed to go up. You know, so That's that's that for that. If I'm to give you another example with the uptrend, I would say, let me show you this. So back to that former uptrend we used before. If at some point, if at some point price comes down and breaks this uptrend here, if price breaks this uptrend, believe you me, as a trader, if price breaks it and retests the uptrend, I I would bet 70 to 80% that price will come down, the price will fall. Because it's like you sitting on a chair, this trend line acting as a chair right now, and then the chair breaks, you will reach ground. You reach ground definitely. So that is what this trend line, that is one way to analyze the trend line. The next one we see is the support and resistance. I love this so much. Let's go. Forget about the plenty talk here. Let's actually look at it from this angle, and we can see. Oh, this is sweet. Let me show you guys. A support is a price floor. A resistance is a price ceiling. I'll say that again. A support is a price floor, and a resistance is a price ceiling. I'm going to show you guys perfect examples of support and resistance. First, I'll use this as this resistance now. Resistance in trading shows us a ceiling, a price ceiling where price finds it difficult to pass through. This is the daily chart, and as you can see, this place I drew this line here, this horizontal line, is a resistance, is a price ceiling. If you check, if this is the first test to this price ceiling. Price hasn't actually seen, apart from this time when we had a rally here. Apart from this time we had a rally here. After this was in 2017. After this 2017-2018 period, price has not successfully, the price of Bitcoin has not successfully broken through this resistance. So I will bet you, I will bet you that after this, at least, the price of Bitcoin will get to 12.5. Now, that is just my own feeling. That is what it's a speculation. It's a speculation. It's not a guarantee. It cannot be 100%. But I'm saying from my own observation, I'll bet you that price will get to 12.5. Why? Because this is a price ceiling. It's the only way price will go past this level is if it breaks through it, right? And at this point, it has not found it easy to break through. This is the only time, apart from the first time, this is the only time it has touched 14K. Bitcoin has touched 14K. And then the first time it touched 14K, you see the result of the 14K. As it touched the 14K, it fell. The first time it fell to this is 9.9 or so 9.8. It came up again. It couldn't even go close. It fell again to 9,000. It rallied again to this is 12.3. It fell just like that. It's not been able to actually break through this. And now it has not still, if you actually watch it closely, it has not actually touched the particular point, but it's still one thing with support and resistance is support and resistance, they are zones, they are not necessarily particular price points. They're actually zones. What I mean by zones is I can, instead of using just a line, I can use this rectangle to show a price block or resistance, a supply block or resistance block. That is something like this, showing that this whole area, this whole zone can act as support or resistance. You get? So it might not necessarily touch 14K, but this whole area is a resistance. If you can see, price finds it difficult to come here or even pass through. So that's it. That's what resistance is, a price ceiling that makes it difficult for price to actually go up. And in most cases, when it hits it, it goes back down, except it successfully breaks through. But there's another thing. If price successfully breaks through this 14K zone, I expect price to come to, if it breaks through it and goes up a little bit, expect a retest. It will come back and retest this particular place as a support. Now, before I go, let me explain to you what support is. I'll be using this as an explanation right here. This right here is a support. Why is why is my it's not working? Okay, so this right here is a support. So Bitcoin from this time has not been able to go lower than this, right? Is a support, a price floor. It finds it difficult to penetrate through that floor. This is a big picture. That's why I'm using this. If I reduce this thing to other time zones, like 4 hour, 1 hour, and the rest of them, you still be seeing all this. This can also be a support, or this is also a support right here. This right here is a support. This place too is also a support. As you can see, look at the line. It's also a support. This place is a resistance. You get this one is a resistance as well. This one is a resistance. But the reason why we're using this one is because we're looking at the bigger picture, a higher time frame, or looking at the bigger picture. So that's why I'm using this one. So if you look at this one, now this is basically 3,000, around 3,000, 3,000 zone. Like I said, supply zone, resistance zone. So price has found it difficult to break down or go penetrate lower than this zone, lower than this price zone. So that's why I'm confident that any day, I don't know if it will ever happen, I'm not sure it will happen in Bitcoin, but if it eventually any day comes down to this, I can bet you that price is going back up. Because not just me, there are many other people looking at this particular price point or this particular zone. So there are many people that if Bitcoin starts going down now, people will put their buy orders here, waiting for Bitcoin to get to this point. And once it gets to this point, I bet you it's going back up. So the support and the resistance acts as price ceiling and price floor. Ceiling for resistance, floor for support. And whenever price touches it, we expect price to bounce back to the opposite direction. So that's for support and resistance. But then if price um, eventually breaks it, I'm going to be showing you guys an example here. Okay, let me show you guys an example. Let me move this one here. So this right here acted as a resistance at some point. You get this was the resistance people are looking at. This is 10 3 10 10 4. Basically 10 4 is not very accurate. The line is not very accurate. But then at some point, this 10 4 acted as a resistance, right? Price came, touched it, it couldn't penetrate. It came down, went back again, touched it, couldn't penetrate, went back down again, came back and touched it the third time, went back down a little bit, and then with full force, it broke through. And once it broke through, that particular resistance became a support. Now that is a rule in support and resistance, that whenever a support or resistance is broken, it flips. If the support that is broken, that support 95% of the time becomes a resistance. If it's a resistance that is broken, that resistance 95% of the time becomes a support. That's why I said if Bitcoin eventually breaks this 14K resistance, expect it to retest. Expect price to go up a little bit, maybe to 15 or 16K, and then come back to 14K and retest it before we see maybe 20K or 100 million. I don't know. So that's how support and resistance works. So if we look at this example, like I showed you, as it broke through, it went, rallied, came down and tested that zone. Remember, I told you support and resistance are actually zones, not necessarily price points. So that's that for that. Let's move to the next one. I hope you understand what support and resistance is right now. Okay. So the next uh, RSI, relative strength index. So relative strength index is an indicator that illustrates whether an asset is overbought or oversold. It's a momentum oscillator that shows the rate at which price changes happen. This oscillator varies from 0 to 100, and the data is usually displayed on a line chart. Let's go back to this one now English. Let's go back to practical. Let me turn on my. So if I want to put, I just come here, click technical indicators and type in RSI, and it pops up, and then I click on it, and that's it. I have my RSI. So the default setting for the RSI is 30/70. So the style, so for the upper limit is 70, for the lower limit is 30, and it's the length is 14 days or 14 periods. Since you are using the daily chart, it's going to be days. If I was using 4 hour chart, it means 14 4-hour periods. You get. So that's that one. So um The basic explanation for, are we still together? Let me just make sure we are together. Are we still together? Can you guys still hear me? Okay, okay. All right, thank you. So the basic explanation for, we're going to the juicy parts now. The basic explanation for RSI is this. Every teacher, that's the basic thing you hear when is when this when the momentum goes above 70, this is the 70 line. When the momentum goes above 70 is overbought, and you have to start looking for a way to sell. And then when the momentum goes below 30, it's oversold. You have to start looking for a buy signal, which is true, which is very, very true. That is how to use, like, okay, let's look at the chart right here. So if you look at this point, you see that the price, look at the price, the momentum here. The momentum is strength. The strength at which people are buying, or the strength at which people are selling. So at this point, you can see that the momentum went up, came to this point above 70, and you know, it fell. The price fell because it was now overbought. People have bought it so much, and they got tired of buying it. And then the next thing to do is sell, because that's what we do in trading: buy and sell. So when the momentum got to this point over 70, people started selling, and as you can see, it was like that. People sold off. You get, it sold off, and then it got to the overbought, the oversold aspect. People have sold and sold and sold and sold and sold. They got tired of selling. This place now is lower than 30. People have sold and got tired of selling, and then they started buying, and price went up. As price went up, momentum went up. That's the basic explanation of RSI. So what should you look out for? You look out to buy when the price is over, when the commodity or the coin is oversold, and you look out to sell when it is overbought. It's just basic demand and supply. For those who did economics, once there is so much supply of a product, the demand becomes low. Once there is so much demand of a product, the supply, right? I'm mixing things up. Once there's so much supply of a product, yeah, so when the supply is more than the demand, then the next thing is going to happen. Just like that, it's basic economics. You get. So at this point, there's so much supply here, so people start buying, and then before you know, there's so much demand, and then people start selling. So that's that for. I'll still come back to RSI because there's something significant I actually wanted to understand with RSI. I'm going to show us that. Please, if I forget, kindly remind me. The next indicator we have to look at is the moving average, right? Moving average is the next indicator we have to look at. Let me turn on my moving average. Personally, I like using the 200 moving average, which is this black line you see here, and then the 50 moving average, which is this purple line you see, and sometimes the 13, 14-day moving average. You understand? So I'll just change the color of my 13 days so that it can be more visible. Let me use white. Okay, so what is moving average? Moving average is actually what it is. Moving average is the average price of the moving average price. That is, for this one now, that is 200 moving average. It simply means the average price out of 200. That is, you add the price of the 200 days. We are using the daily chart, so it's going to be days. The 200-day moving average. So the average price of 200 days. So assuming the prices were 10,000, 11,000, 12,000, you add all of them together and divide them by 200. Then it gets you the particular price at that point. Like now, at this point we are. This is the moving average for this point. The moving average is 10K 134, 10,134. At this point, 200 moving average is 10,134. For the 50-day moving average, it is the same formula. You add the price backward to 50 days and divide by 50, the average moving average. it gets you this particular price right here, 11,338. Then the next one, like I said, is I use 3 most of the time. This is 13-day moving average. Some people use 7 days, some people use 9 days. Depends on how you do your own analysis. You get. So this one here shows you the 13-day moving average. It means in the past 13 days, the average price have been 12,000. As you can see here, this is 12,005, around 12,005. That's the average price for the past 13 days. So that's just that. That is what moving average is. But how now do we use it for um, our analysis? The first thing you should understand is once the lower period moving average crosses the higher period moving average, it signals a trend change. Assuming this as this moving average, this one is moving now, right? And then this 50-day moving average, let's disregard the lower, the 13-day for now. Let's use, because the 50-day and the 200-day are actually very, very strong signals, right? So this is the 200-day moving average, and then this is the 50-day moving average. At any point, if the let's go back to the chart. Now, let me remove the RSI for now. Okay. So remember I said the black one is 200, the purple is the 50-day. I want us to understand this. That's why I'm thinking, okay. Now, at this point where, look at this point where the 50-day moving average crossed over, we are experiencing a downtrend, as you can see from here. We're experiencing a downtrend, down, 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 down. And then at some point, the 50-day moving average crossed over the 200-day moving average above, that's pointing above, not below. It crossed above the 200-day moving average. Immediately we start seeing an uptrend. It signaled an uptrend, and as you can see, the price actually moved upward to this point, and it was still an uptrend until this point, right? Until this point where the same 50-day moving average crossed below, you get, crossed below the 200-day, and we started seeing a downtrend. It was still trending low, until even here, it didn't stay long. The trend change didn't stay long. It was just for a couple of days, and then it moved back downwards, to signify a downtrend. But here now we've seen that the 50-day moving average has crossed above the 200-day, and then we've been seeing an uptrend since. Remember, we actually drew a trend line earlier with this showing that it's an uptrend. Apart from that, you can see higher highs, higher highs, higher highs, higher highs here, and higher lows. So you can see that it's an uptrend. So that's what the moving average does. It signifies, uptrends and downtrends per se. But there's another thing the moving average does. Moving average acts as a dynamic support. We talked about support and resistance, and the one I showed you are static support and resistance, where you put support and resistance at a particular price point or zone, and it's just there. Let's say like this. It's just there. So what the price has to do is move and come back, move and come back. But then when is the moving average, as you can see, this 200-day moving average now acting as a dynamic support, keeps moving under price. Even if I remove the 50-day moving average, I can use only the 200-day moving average to do my analysis. Why? Immediately price on its own moves, crosses above or below the 200-day moving average, I can understand that something is about to happen. There's about to be trend change. But then the thing with trading is you don't make all your analysis based on one. You have to confirm from other indicators or from other patterns. You don't just base all your analysis on one particular thing. So if I see this, I check, okay, does the RSI confirm the same thing? Does one other, maybe the price pattern, does it confirm another thing? So to make sure that I'm making the right decision. So like I said, as the price crossed, if you look at this point here, where the price crossed over the 200-day moving average, we saw the spike, we saw the uptrend that we are seeing, that we got at this particular time. Immediately the price crossed over the 200-day moving average, we got the uptrend. And then once the price fell, once the price crossed over below, we saw price move here again. You understand? Why I said you have to confirm is maybe some people may have put long, may have bought here. Like I said, you have to confirm from other indicators and other patterns. Someone must have said, okay, price crossed over here, so I'm going to buy. And he buys here, and then the price fell. So you don't base all your decisions on one indicator. All right, let's move to the next one. This is for moving average. The next one we are supposed to talk about are Bollinger Bands. Bollinger Bands. Bollinger Bands, this indicator is made up of 3 lines or bands. Um, a simple moving average, which is the middle band and an upper and lower band. These bands are then overlaid on a chart along with the price action. The idea is that as volatility increases or decreases, the distance between these bands changes. They expand or they contrast. Let's move to the chart. Let me turn off this. Okay. Why is this still showing? Okay, so this is Bollinger Bands. It's quite easy to use. Just forget about it's not difficult. This is very easy. So basically, Bollinger Bands is just simple mathematics, and this middle line here is a 20-day moving average, like the normal moving average I just talked about. The middle line is the 20-day moving average, acts as a support and resistance as well, dynamic support and resistance as well. But then these two bands up and down are two standard deviation apart. That is, from the middle line, from the 20-day average, you have two standard deviations above and below. Those are what the two up above and below bands are. You get. So at this point, you see it's this point. Okay, let me use this point. Let me show you. So at this point here, right? At this point, you see that the bands are tightened. It shows there is a low volatility. You get. And if you're seeing that the bands are tightened at this point, the next thing I'm going to be expecting is, okay, whenever the band starts expanding, which means there's supposed to be there's going to be a massive price move coming. You get. So whenever it is I start seeing bands expanding, the middle line is 20-day moving average. 20-day moving average. Moving average, like I talked before, I thought about the 200-day and the 50-day and the 13-day moving average, but this one is 20-day, the same moving average, but it's calculated 20. That is the price 20 days behind the average. So that's it. So for the Bollinger Bands, like I said, wait, that's stop. Okay, once I start seeing the Bollinger Bands expand, I immediately um, expect volatility, either up or down. But then you will always want to, like I said, confirm with other indicators. You understand? Another thing that happens is the up and down bands act as support, dynamic support and resistance as well. You get? So let's use this point. Let's use this price point here. This price point here. You can see that as the bands start expanding at this point, start expanding, here we see that the price moves below, the price expand, the bands expand, and then because we know that the bands can actually act as support or resistance, and this place actually shows that it's a support. One can buy here because we can see that it has actually moved outside of the band, and we expect a reversal. If you look here very well, it moved outside of the bands and we expect a reversal. So if, assuming you bought here, if you have bought here, that means if you bought here, you have made up to 20 or 30% profit. As you can see, 20% or 30% profit. Someone who bought here and sold up here would have made 20 or 30% profit. So the basic idea is you buy at the lower part of the band and sell at the higher part of the band, especially when it's expanding. Right? Another thing is the middle line, which is the moving average, can also act as a support or resistance. It can also act as support and resistance. A perfect example is this one here. At this point, it was acting as a dynamic resistance. Then price crossed over. This one wasn't very clear, but then at this point, when price crossed over, it actually became a support for price, and it moved higher and higher and all that. But for me, I actually prefer using the lower or the upper bands, because I feel that's more correct. I feel that's more correct because if the price is at this point, I know at some point it's going to go higher. Another thing is if you're using this indicator, you have to confirm with your regular support and resistance, right? Your regular support and resistance. What do I mean? Okay, at this point, I've seen that maybe the price has come down and I'm expecting it to reverse. What do I do? For me, I'll turn off the Bollinger Bands and then check this point. Is it actually on a support? Is there actually a significant probability that it's going to move up? When I check, it's actually at a support right here. You see, it's actually at a support. This place is actually a support zone. So there's a very high possibility that or probability that it's going to go back up because I can confirm that this place is actually a support. So before you use any indicator, make sure you confirm from your make sure it's in line with your trend with the trend and also in line with the support and resistance. Anything, don't trade against the trend except you've seen a significant signal that says the trend is going to reverse before you trade. So those are the three indicators we'll talk about. I'm going to be showing you the secrets in that RSI later, but let's continue for now. Okay. All right. So the next thing to teach is scalping. So scalping basically is trading in the smallest time frames. What I've been showing you since in the daily time frame, but scalping takes place in smaller time frame, minutes or sometimes even seconds. Some people trade with the 1 minute chart. Some people trade 30 seconds charts. But I don't like going there most times. So in most cases, they'll use technical analysis to try and predict price movement and exploit the bids or ask spread and other inefficiencies to make a profit. Now, due to the short time frames, scalp trades often target only a small percentage of profit, usually less than 1%. Just scalping is just you enter this trade, you make 1%, you enter this trade, you make 1%. But the secret behind this, the secret why people do it is because if you accumulate those 1% in a full day, they may have made up to 20-30% out of those scalping, but it's very, 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 very risky for beginners. So, but scalping is a numbers game. So, repeated small profits, like I said, can add up over time. Scalping is by no means a beginner. If you're a beginner, don't bother doing this at least for now. An in-depth understanding of the markets, the platforms you are trading on, and the technical analysis are vital to success. So before you scalp, you have to make sure that it's in line with the trend in the higher time frame. If the trend is going down in the daily time frame, you don't scalp. You don't go and buy on one minute time frame or 2 minute time frame. You don't. That's the recipe for disaster. You don't do that. So it has to be in line with your daily higher time frame trends. You get. So day trading is the next one. Is day trading. Day trading is what we see in pretty much every every movie involving Wall Street. The day trading strategy involves entering and exiting positions within the same day. Yes, entering and exiting positions within the same day. Probably you check a trade, but in this one now, most times you use the 4 hour or the 1 hour time frames. To trade, you check the 1 hour time frame, 4 hour time frame, the support you buy, you sell at the resistance, you buy at the support, you sell at the resistance. You get. So cryptocurrency markets, as you probably noticed, are not subject to opening or closing time. For the cryptocurrency markets, there's no opening. You trade 24/7. I can wake up in the midnight. If I can't sleep, I start trading. I start looking at the market and deciding if I'm going to take a trade or not. So you can trade around the clock every day of the year. Still, day trading is the context of cryptocurrency. Okay, in the context of cryptocurrency, tends to refer to a trading style where the trader enters and exits positions within 24 hours. In the day trading, you often rely on technical analysis to determine which assets to trade because profits in such a short period can be minimal. You know, the profits like in day trading, although it can be more than scalping, but in day trading you can make maybe 4, 5, 10%. But if you can do that 3, 4 times, especially on spot trading, you're going to be doing good for yourself. You understand? So because profits in such a short period can be minimal, you may opt to trade across a wide range of assets to try to maximize the return. That means you're trading two, three, four different markets at the same time. You're buying and selling in two, three, four different markets at the same time. So that said, some might exclusively trade the same pair for years. That's their own decision. This style is obviously a very active trading strategy. It can be highly profitable, but it carries with it a significant amount of risk. As such, day trading is generally better suited to experienced traders. Okay, so swing trading is what most people do. Swing traders work with larger time horizons, like from daily, weekly, monthly time frames. Uh, so positions are usually held anywhere from a couple of days to a couple of months. So fittingly, the goal is to profit from a longer or larger swing in price. Let me show you. Let me show you in the charts. So imagine, okay, this is daily. Imagine somebody saw this at this point when Bitcoin was at this point and bought it and bought Bitcoin here. Let's look at the kind of profit the person must have made. It's this swing trading. When Bitcoin got to this point, see 300% profit. You get, so this is basically swing trading. He has watched the market has fallen to this point, and he has seen that this is a very, very valid support. And there's a very high possibility that at this point, Bitcoin is going to turn. So he buys Bitcoin somewhere here, holds it for months, and then he gets, or even weeks, this should be months, and then he gets to this place and he sells it and waits for another opportunity to buy again. So that's swing trading. Okay, often your goal as a swing trader is to identify an asset that looks undervalued and is likely to increase in value. You purchase this asset, then sell it when the price rises to generate a profit. Or you can also try finding overvalued assets that are likely to decrease in value. Then you could sell some of them at a high price to buy them back later for a lower price. So that's swing trading. Similarly to how it is with day trading, many swing traders will use technical analysis for their trading. However, as their strategy plays out across longer periods, fundamental analysis can also be a valuable tool for swing traders. Like I said, let me give you an example. If the government, because I believe the government is still key to so many financial movements. If the government now says they are banning cryptocurrency exchanges, and they have no right um, to to allow people to buy or trade on the exchange anymore. They ban Binance, they ban all other cryptocurrency exchanges. It's going to affect the price of Bitcoin. It's going to definitely affect the price of Bitcoin. You understand? And the government says they are endorsing Bitcoin, that they want to be accepting Bitcoin as payment in all they are going to be accepting Bitcoin as payment in all their government offices or whatever it is. The price of Bitcoin will go up. So even if you're a swing trader, fundamental analysis will also affect you. So as it doesn't come with the stress and adrenaline of fast-paced day trading, swing trading, as it doesn't come with the stress and adrenaline of fast-paced um, day trading, swing trading can be an ideal strategy for beginners, where the former is characterized by rapid decision making and a lot of screen time. Swing trading allows you to take your time with your trades. That's why I love swing trading. You buy and just rest. After days or weeks or months, you can sell and take a profit. So that's that. Okay, I think I've been explaining this at the live. I've shown us what support and resistance is. I've shown us how to buy, how to sell. I've shown us how to navigate the exchange. But then, if any of us here has a question, there's something that we don't understand, we could ask, please. There's something we don't understand, we could do well to ask. I would also show us. Are we? Can we hear me? Okay. If there's something, if there's anything you don't understand, kindly I want to make sure because we're going to be doing the practical session of Binance and right now on Binance. I hope we've all created. I hope we've all created our links. Yeah, I know. I'm going to talk about the RSIC, but before that, I'd like us to please, if you don't have a Binance account, hold on. Let me give me a second. I'm going to stop sharing my screen. I'll continue in a minute, but just give me a second. Let me get my okay. Give me a second, please. I want to get my because I would like each and every one of us to actually open a Binance account, especially for those of us who have not created a Binance account. Because all these things you are saying here, it can't work except you have your own Binance account. It can't work except you have your own Binance account. So for those, I put the Binance account on the registration, but then I don't know if most of us got it. So if you didn't get it, I'm going to be sharing it now. Okay, I'm going to be sharing it now. I believe you can see it. Okay, someone is asking, how do you know when to get in or out, or get out of a trade? Okay, I'm going to just remind you, I'm going to show that. I'm going to say that. So I've dropped the link. Kindly register. Open. Um, that's my Twitter handle. Kindly tweet about this program on Twitter. Say something nice about the program. If you've learned anything, say something nice. Tag me, as well as tag Binance Africa. Tag Binance Africa. Once you just type Binance Africa, you see it there. It will come up. Tag Binance Africa. Use the hashtag my Binance class. Use the hashtag my Binance class. Can you do that for me? I think I should give a gift to the first person who will tweet about this and drop the tweet link. But don't drop it now. I'm going to say when to drop it so that the first person who drops the link and I check and confirm, that person is going to be getting a gift of how much? $5 or $10. Let me see. Okay, the first two people be getting gifts of $5 each. First two people who tweet about this program. And I may also consider people who create an account right now. Okay, for those of you who have not created an account, kindly do that. And Binance will be giving you 5,000 naira for your first trade. Like if you make your first trade within this week, you create an account now with my link and make your first trade within this week. Binance will be giving you 5,000 naira. So please tweet about it. Keep your links handy because I'm going to be once I ask for it, the first two people are getting $5 from me. Getting $5 from me. So let me go back to sharing my screen. Okay. Can you see my screen now? Can you see my screen? I don't want to go back to the last station I was earlier. Please, someone give me a response. Can we see my screen? Okay, thank you very much. Thank you very much, Emmanuel. Thank you very much, Nasiru. So, um, so if you sign up, like I said, sign up now. If you sign up and trade your first crypto within this week, you can. Okay, it's $5, not 5,000. $5 from Binance. If you sign up and trade your first crypto within this week, this first week now, or this week we are in right now, you're getting $5 from Binance. But that's not my own. Is if you tweet about the say something very nice, it must be nice. So if it's not nice, I'm not giving you the $5. Say something nice, tag my handle. I've put it there on the comment section. Tag Binance Africa and use the hashtag my Binance Class. If you do it and then send me the link, I check it out. I'm going to give you $5 for the first two people. So follow Binance. This is the handle here, Binance Africa. So I'm going to show you right now how to place a trade on Binance, how to buy and sell crypto, and then how to deposit. I'm going to be doing a live session right now with each and every one of us. So okay, before that, let's go. Let's move on. Let me. I want to deposit. So let me come back to home. So basically, if I want to deposit, I come to my spot wallet, fiat and spot. So I want to deposit Naira and use the Naira to buy or sell. Okay. I'm going to deposit Naira, use the Naira to buy or sell crypto. So I go to deposit. I hope you can see. I go to deposit, I go to fiat, because fiat is actually paper money, the money issued by the government. So I choose my currency. What currency do I want to deposit? Definitely Naira, not any other thing. I'm Nigerian. So I want to deposit Naira. But when you're depositing, there are two ways that you can use to deposit. Either deposit through bank transfer or deposit through your card. Right? You can deposit through bank transfer or you deposit through your card. And if you're depositing through your card, you're going to be paying 1.4% fee. If you're depositing through bank transfer, you're going to be paying 150 naira fee. So the secret is this: if you're depositing through your card, deposit nothing more than 10,000 naira. If you want to use card, don't deposit anything more than 10,000 naira, because if you're depositing 10,000 naira with a 1%, 1.4% fee, the fee will be very, very low. The fee will even be lower. I think the fee will be lower than 150. If you are doing the calculation, I won't do that now. But okay, let me do that now. You can do that yourself. If you're depositing 10 million, the fee will still be 150 through bank transfer. If you're depositing 5-10 million through bank transfer, the fee will still be 150 naira. But if you're using 1.4%, 1.4% of 10 million, you know how much it is. So I prefer bank transfer. So I want to deposit now. I want to deposit. Let me say 10,000 naira. I want to deposit 10,000 naira, and my fee is 150 naira. So I click on continue. I've clicked on the amount. I've clicked on how I'm going to deposit. So the next thing now, I'm expecting the account number to pop up. So the account number has come up, and I want to deposit now. I'm trying to open my bank app so I can deposit a sum of 10,000 naira to Wema Bank. You see all the details here. So let me make the transfer. Okay, transfer Wema Bank. Account number 7829 292 68 10,000 naira. Finance holdings. Let me see. I hope network is okay. All right, I've made the transfer. Transfer successful. So I click on I have made the transfer, and once I do that, it's now I think probably surfing the waves to make sure I've made the transfer. So once that happens, I'm waiting for them to confirm. Okay, why they confirm? Let me While they confirm, so you can become a tutor to the same way I've done this. You can actually, if you're passionate about spreading this knowledge within your community, you can apply to become a Binance tutor, and you could be hosting your own very own Binance class. So you can apply. Just if you go to Twitter, search for my Binance Africa, search for Binance Africa rather, then you would actually see the link to apply there. Or if you create an account now and check your messages, you see it there, see how to apply there. So let me see if it has entered. It has not come in. Waiting for network. So all right. So you can also follow all our handles of Binance, and this is Binance Africa on Twitter. Follow them on Twitter. You can join. Let me increase this so we could all see it. You can follow. This is for South Africa. This is Nigerian page, Facebook page, www.facebook.com Binance Nigeria. Join our Nigerian community. Join our. These are all the communities for different countries, but I know mine is Nigeria, so you just join the Nigerian communities right here. I hope this thing has come. What's happening? I don't know why it has not come. Probably network. It's still processing. It's showing on my phone that it's still processing on the Binance app. So, but then you could navigate. Okay, let me just take questions. Let me take questions for now. Let me take questions. Please, if you have questions, kindly. I didn't say drop the link now. It has not reflected. The link, I didn't say drop the link now. I said when I'm ready, when I say drop the first two, you get $5 from me. RSI. Yes, RSI. Okay, let's go. Let's go to RSI. This should have gone through. I don't know why it has not gone through. I've already been debited. Okay, let's go to the RSI. Nope, I'll cancel. I want to put back. Okay, so back to our charts. Let me show you some secrets or a secret about RSI. I don't know why this stuff hasn't come through. I wanted to place some order. I wanted to place a buy order. All right, I'll be looking at it from my phone to see. Okay, so go to technical indicator, type RSI, relative strength index, and okay. So there's what they call divergence. What they call divergence in trading in RSI. Yes, I made it to my deposit. Yeah, I made it to my Binance account. I sent the money from my bank account to my Binance account. So you can actually deposit money in your bank account. If you just go and click deposit, it will show you the next interface that it showed us there. You choose what you want to deposit. You choose whether it's crypto or it's fiat, cash, money, paper money. So if you want to deposit naira, you click on fiat, then choose the currency you want to deposit, which is naira, and then you click on it, and it shows you the account number to pay to. That's all. That's all. So okay, RSI. There's what we call divergence. There's something that's called divergence. Divergence is normally for an indicator and price movement. When they are moving, they're supposed to be moving in the same direction. Something like this. Remember, I told you that I draw trend lines on my indicators like RSI. So this is a trend line right here on my indicator. You understand? So this is a trend line. So I draw trend lines on it, but that's not the point now. The point is when price is moving, it's supposed to be moving in the same direction with the indicator. This is price movement, and as you can see, indicator 2 is showing that is moving upward. You get indicator shows that it's moving upward. So, but there are special cases where price is moving in a particular direction and the indicator is moving in a different direction. Now we're going to look for such cases right here. Okay, I've seen one already. Let me show you. Let me show you. This is divergence. I think my deposit has been received. This is called divergence. Price is moving um, upward, but the indicator is moving downward, right? Okay, no, this is supposed to be. Hold on, let me draw this well. Price is making. This one I'm showing you is even more. This is hidden divergence. Let me not show you hidden divergence. I beg. Don't confuse people more. This is hidden divergence. This is for. Okay, okay. Look at it. Look at this now. Please pay attention to this. Is really important. At this point now, price keeps moving up. Right? Price is moving up. You're looking at the higher highs. But if you look at the indicator, the indicator is making either lower highs or equal highs. Price moved right here. Price moved up to this place. Instead of the indicator to move up to, it stayed. It even went. I think it went lower than this. It went lower than this. At this point, price made a higher high. It still went lower than this. That shows you that the strength. Remember, this is relative strength in the index. The strength of buying is getting weak. So you start looking for a turning point, and you can see that as the indicator stops moving upward, the next place to go, if you can't go up, you go down. If you can't go up, you go down. Even at this point, even though this one wasn't strong enough, at this point, look at just make sure it is equal. They're both equal. At this point, when price made a higher high here and price didn't make a higher high, price actually made a slightly lower high, or let's say an equal high at this point. Price still dropped a bit, but it wasn't really strong. It dropped from 8.5 to this is 7K, dropped from 8.5 to 7K. So once the price is moving in one direction and the indicator is moving in a separate direction, expect something different to happen. The price was for this is actually a bearish divergence because the price is making higher highs and the indicator is the price is going up and the indicator is going down or going sideways. So you expect the price to actually stop and range or totally flip and go down, like in this situation here. Let me show you. In this situation here, after the price got here, the the price flipped, the price fell to this point. You understand? Because there's no more strength to carry it along, no more strength. The thing has the basic explanation of RSI was when it gets to 8 to 70 is overbought. The indicator past 70, it even got to 85. They don't buy and tire. If they've bought it and got tired of buying it. You get. So the next place to go is down. The momentum, the strength has to go down so that it will get itself again before it starts. So as the strength went down, the price went down too and came here, and then before the strength started going up again, and then the price started going up. So divergence is when the price and this stuff are not still coming. What is the occur? When the price and the indicator are going separate ways. The price here is going up, the indicator is going down. This is for bearish divergence. Let me show you bullish divergence. This one shows you that the price is going to go down. Let me show you bullish divergence here. For bearish divergence, we look at the tops. We look up. Look at the price tops. Yeah, the price highs. For bullish divergence, we look at the price lows. Keep this in mind. For bearish divergence, we look at price highs. For bullish divergence, we look at price lows. And at this point, you see that price was making, at this point here, market, watch it very well. Price made a low here, also made a low here. But then it comes here, instead of the indicator making a low, because the price made a low, it's supposed to be going together. Instead of the indicator making a low, the indicator here made a high. Are you seeing what I'm sharing with you? I hope you can. Did they hear? Are we are we are you guys with me? Please say something if you're with me. Okay. All right. So instead of the indicator making a low, the same way the price made a low, the indicator made a high, showing us that it has gotten momentum, it has gotten strength to push up. And if we check the chart, we can actually see that it actually pushed up. It actually, if we see whoever bought Bitcoin at this point made over 30% gain, almost 40% from this point to this point in 3 days or in 2 days. Because this is daily chart. So you look at the indicator here, it's a lower low, this is a higher low. Meanwhile, price is showing a lower low, lower than the first low. Price fell, indicator rose to show you that price is going to go up. Do we understand? I hope you understand. This actually, see, divergence is a high probability uh, setup. Once you see divergence, there's personally, I'm not saying it must work for you. For me, I can say for me, it is not a carving in a stone. Personally, it works for me, right? There's a very high possibility that if you buy a divergence, like now, if you see a divergence and you follow it, it's going to go in the direction that it's telling you that it's going to go. Like as price was going down here, price was going up, the strength was going up here. If you had bought here, you'd have made some profits. Again, I'm not a financial advisor. This is just for educational purposes and for entertainment purposes. You get, so the same thing happens here. Let's look at it from here, right? This is the price, and then let's look at the indicator. Let's look at the indicator from that same point. What happens after this setup occurred? After you saw this setup, price actually moved in that direction. That is, price actually moved up. So what this says is, if you see this kind of setup, you buy. This is a bullish one, you buy. But if you see the bearish one, where the price is making higher highs and the indicator is showing you lower highs, you should sell. You should sell. So that is what this is divergence, and that is how it works. There's also the one called hidden divergence, but I won't go. That's too technical. You have to understand this normal divergence first before you go into the hidden divergence. This is normal divergence. The hidden divergence is actually quite more complicated than this. Let me see if my money. Okay, it has come in. I believe it has come in. Let's go back to our trade. So the naira has come in now. So the next thing we'll do is we want to buy. So I want to buy Bitcoin with the 10,000 naira. So I go to BTC NGN. It's BTC NGN now. I didn't show. I think they'll call BTC NGN. All right. So it has come now. So you see my money. My money has entered. So I want to buy Bitcoin. So I want to buy Bitcoin with all the money. So we're going to be looking at the price of Bitcoin currently 6.3 million, 6,304, no, 6,347,238. So I actually want to buy Bitcoin at this price, the current price, or let me just use the market order. Limit order is if maybe I want to buy lower or higher, but I don't have time to wait for limit order. I want us to close early. So I just scrap this out and use the market order. How many Bitcoin do I want to buy? I want to buy as much as I can buy with the total amount of Naira I have. So I just place buy BTC. And you see that it has executed. It has executed. Look at my open orders. There is no open order set because that look at the trade history, you see it. My buy BTC, see it. It has gone. The other history shows the same thing too. It has failed. Check if you check now, you see that I actually have BTC. If I want to sell, you see that I actually have Bitcoin to sell. I have some Bitcoin right here. So that's how to place trades. Just that's I'm using the market order. So that's how to do it. Now I want to sell my Bitcoin. I'll still use the same market order to sell my Bitcoin, right? So selling everything back to Naira. Remember, I bought it with Naira. I bought Bitcoin with Naira. Now I'm selling my Bitcoin to get Naira. So that's how it works. So I'm selling it now, and it's going to fill in a split second. It has already filled. So now I have Naira again. If I go back to buy, you see the Naira here. I have now. I actually made some profit though. Wow, that's nice. I made 7 Naira profit. I sold, and I think Bitcoin went up a little bit. So that's that's how to buy and sell. I've shown you how to deposit, and that's how to buy. If I want to withdraw, okay, let's go. Let me show you also how to withdraw. Okay, let me. I want to withdraw my naira. Maybe I've paid. Assuming I actually made a settle, like I settled down to trade and I've made some profit, and that my 10,000 has increased, and I want to withdraw it back now. I want to go and I want to get. I want to do. I need 2K urgently. I want to go and soft. You know, I want to go and hang out, soft, relax. I want to withdraw my 10K, my 2K urgently. So it's the same thing. You go to fiat, you choose the currency which is naira. It's still going to be bank transfer. This one is going to bank transfer definitely because you're withdrawing. So I click on the for the bank for the withdrawal, they take 300 naira fee. So what I'm going to be getting is 9,557 naira, which is this. Then I click on continue. Okay, so this is my bank account. Cram this bank account in case you want to send me money. Cram it, access bank, cram it. One of my code. All right, so I confirm withdrawal, and then okay, so this is my for my verification. They sent me all right 396027. Hey, 396027. All right, for the email verification, they accept me withdraw. Okay. Then for the Google, this you see this now. It will be difficult for somebody to withdraw money from my account without my consent because of all these security measures I've put in place. So with my authentication code, Google verification code, I have 199. Submit, and that's it. After a couple of minutes now, I'll be getting my alert. It's as simple as that. It's as simple as that. So uh, let's go back. So so please does anybody have any question? If you have any questions, kindly ask now because I've shown you guys this RSI. If you traded in USDT, see the same thing. I just did this to just show that you can actually buy with Naira. But with that Naira now, I can actually use Naira to buy. If you want to withdraw, you can't withdraw USDT to except your USDT is a cryptocurrency. USDT is a stable coin. You get. So if you want to withdraw, you convert your USDT to Naira. There's actually USDT Naira pair. You see, okay, if I buy with, assuming I bought this Bitcoin I just bought now, right? I bought it with market order. Please hold on, Toby. Assuming I bought this Bitcoin with market order, right? And then I have the Bitcoin. I can set stop loss. So once you buy, you can actually set stop loss. You get. Then you can maybe if the stop loss doesn't trigger and you make some profit, you can sell it off with market order. So that's how it works. So there's actually a USDT NGM pair. That is, you can actually, let me show you. See it here. There's a USDT Naira pair. You get. You can actually buy, like sell. If you have USDT, you can change it to Naira. If you have Naira, you can change it to USDT. Because with Naira, you can only buy Bitcoin, Ethereum, and Tron. You can't use Naira to buy, let's say, DOT. You can't use Naira to buy Link or any other cryptocurrency. So you have to change them to maybe USDT or change them to BUSD. BUSD is another stable coin. It's the stable coin of Binance. BUSD. BUSDNGN. The stable coin of Binance. You can change it to BUSD and use it to buy whatever coin you want to buy. How to cover BTC. What's this? How to cover BTC? Convert BTC to USDT. If you want to convert, if you have BTC to you just come and sell your Bitcoin now, like I just did. You come here, click on sell. You have Bitcoin already. Click on the price at which you want to sell it. Click on the amount of Bitcoin you want to sell, and then sell. That's all. That's how to convert BTC to USDT. And then if you want to withdraw, you convert that USDT that you got from BTC to Naira and withdraw to your bank account. I don't understand the explanation on how to sell BTC in Binance. That's what I just said. You just, if you have Bitcoin, you sell the Bitcoin to USDT or sell it to Naira. Instead of going to USDT, maybe you want to withdraw the money, you sell it directly to Naira and withdraw. That's it. Any other questions? Any other questions, comments, or whatever? Man, I'm tired already. Any questions? Do we? Okay. The last before we leave. So if you've tweeted about the event on Twitter, okay, just first of all, like I said, you have to create a Binance account and trade. Then Binance will actually give you $5 for trading. This week, if you trade this, Binance will give $5 for trading. So for my own, I'll be giving the first two people to drop their links now. If you tweeted about me, Mohammed Nasiru, Afolabi, Samuel. All right, this is Mohammed Nasiru and Afolabi Samuel are the winners. $5 to you guys. But I'm going to be sending these $5 to Binance accounts that you created with my link. This is my phone number. My WhatsApp. Contact me on WhatsApp. There's no minimum account or minimum BTC rather that you can send to Binance account. There's no minimum BTC you can send to your Binance account. Send as much as you want to send. Send 1 million Bitcoin. If you have 1 million Bitcoin, send to go. Hold on. I think I sent. Did I send? Please don't chat me privately. Okay, I think this should be my link. I think I sent it earlier. Hold on, please. All right, I think we have that. Afolabi Samuel, Mohammed Nasiru. So those are our two winners. I'll be sending them $5 I'll send you $5 in BNB. I'll be sending you $5 in BNB. Okay. $5 in. Next time, please don't send me a message privately. Send it to the group so we could all see. So thank you all for your time. Please chat me up. But someone sent less than 1 BTC to my account, but he didn't see it. What could be the problem? Maybe it has not confirmed. So we only use stop loss. Yes. No, you can. There's market order for stop loss too, but I don't think that's just use the normal one that is there. That's easier. That's easier. Maybe it has not your bit. Maybe your Bitcoin has not confirmed. Naji. Maybe your Bitcoin has not confirmed. Okay, I've said so much this night. Um, I refuse headache in the name of Jesus. So please, this is my. I'll type my phone number. Please don't send me a message privately. 08146195646. That's my phone number. OCO order. I won't say it here. I'm already tired, and it's not in our um, slide. I won't say it here. So thank you guys. Thank you all for coming. God bless you. God bless you for staying till this time. I think that's all for now. So goodbye, guys. Thank you all. Thank you very much for coming. Thank you, thank you, thank you. God bless you guys for coming. Thanks. We'll see during the next meeting. I'll also be teaching. I believe I'll be teaching technical analysis during the next meeting. So thank you for coming, guys. God bless you. Thanks so much. Thank you. My WhatsApp number is 0814 619 5646. All right, thanks. Bye, guys.